Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial report from T. Rowe Price, and let's just say when you see the words Target 2010 Fund, you might expect some big numbers, but digging into these filings can reveal some interesting and sometimes surprising insights into how these massive investment funds are really performing. We'll be sifting through their latest performance data to see what is really going on behind the scenes. So before we dive in, if you like getting these easy to understand breakdowns of complex financial documents, hit that subscribe button. And if you want to chat with us and other finance enthusiasts about these reports, join our Discord community. The link is in the description below. Alright, let's talk about the T. Rowe Price Target 2010 Fund. This report covers the period ending the 30th of November 2025, and it gives us a look at how different classes of shares within this fund have performed and what they invested in. What's interesting right off the bat is that this fund doesn't actually hold individual stocks or bonds itself. Instead, it invests in other T. Rowe Price funds. It's like a fund of funds designed to become more conservative over time as the target date approaches. First up, let's look at costs. For a hypothetical $10,000 investment in the investor class, the costs for the last 6 months were $23, which works out to 0.45%. This is on the lower end, which is good. You can see the advisor class had higher costs at $36 or 0.70%, and the I class was the cheapest at $16 or 0.30%. Generally, lower costs mean more of your investment returns stay in your pocket, so this is a key thing to watch. Now for some overall statistics. The total net assets for the fund were around $69,473,000. That is a pretty substantial amount of money. It held 27 portfolio holdings, meaning 27 underlying T. Rowe Price funds. The portfolio turnover rate was 10.3%, which suggests the fund isn't actively buying and selling its underlying investments at a rapid pace. This generally aligns with a more stable, long-term investment strategy. Where is the money going? The asset allocation shows a significant chunk, 45.3%, is in domestic bond funds, then 25% in domestic equity funds, 16.9% in international bond funds, and 9.2% in international equity funds. The rest, 3.6%, is in short-term and other investments. This mix indicates a leaning towards fixed income, which is typical for a fund targeting a 2010 retirement date, suggesting it's generally moving towards a more conservative profile. Let's drill down into the top 10 holdings. The largest holding by far, at 19.6%, is the T. Rowe Price Limited Duration Inflation Focused Bond Fund. This is followed by the T. Rowe Price New Income Fund at 18.7%. These two bond funds alone make up a significant portion of the total assets on the equity side. The T. Rowe Price Growth Stock Fund and the T. Rowe Price Value Fund each represent 4.9%. It's clear the fund is heavily weighted towards its own bond funds, with a smaller but still diverse allocation to equity funds. Looking at the detailed portfolio of investments, we see the same trend. Under bond funds, the Limited Duration Inflation Focused Bond Fund and the New Income Fund are indeed the largest holdings by value. Then comes the International Bond Fund, USD Hedged, followed by Emerging Markets Bond Fund and Dynamic Global Bond Fund. On the equity side, the Growth Stock Fund and Value Fund are the largest, followed by Hedged Equity Fund and AS Large Cap Core Fund. It is interesting to see that they are investing in their own suite of funds, which is common for target date funds, but it also means their performance is directly tied to the success of these underlying T. Rowe Price vehicles. This section titled Affiliated Companies is a bit technical, but it is essentially showing the gains and losses from investing in other T. Rowe Price funds. For the 6 months ending the 30th of November 2025, the fund had a net realized gain of $153,000 and a change in net unrealized gain of $3,017,000. This means that overall, the underlying funds the Target 2010 Fund invested in saw a good increase in value during this period. It shows that the fund's investments within the T. Rowe Price family generated positive returns. Now, let's look at the fund's balance sheet as of the 30th of November 2025. The total assets were reported at $69,536,000. After deducting total liabilities of $63,000, the net assets come out to $69,473,000. This figure is pretty consistent across all share classes. We see the net asset value. Per share for the investor class was $12.1, advisor class was $12.15, and I class was $12.15, and I class was $12.14. This slight variation between classes is due to their different expense structures and fee arrangements we talked about earlier. On the operations side, for the 6 months ended the 30th of November 2025, the fund generated $1,367,000 in income distributions from its underlying funds, after accounting for expenses like investment management and administrative fees, which totaled $121,000. The net investment income was $1,246,000, plus they had a net realized gain of $153,000 and a significant increase in net unrealized gain of $3,017,000. All this resulted in an increase in net assets from operations of $4,416,000. These numbers indicate a healthy period of growth for the fund's assets. Looking at the changes in net assets, we see that over the 6 months ending the 30th of November 2025, the fund's net assets increased by $3,635,000, bringing the total net assets to $69,473,000. This increase was primarily driven by the operational gains we just discussed, as opposed to large inflows of new money from investors. Digging into the notes, we learn that the Target 2010 fund itself invests in other T. Rowe Price funds. The management fee is structured as an all-inclusive fee which covers most of the fund's operating expenses. This fee is tiered, meaning it decreases as the fund reduces its stock exposure according to its target date glide path. For the investor and advisor classes, the fee is around 0.45%, and for the I class, it's 0.30%. This fee structure is quite common for target date funds and aims to provide a predictable expense ratio as the fund matures. Under other matters, they touch upon risks related to unpredictable events like natural disasters, geopolitical instability, and public health crises. These are quite broad but important to acknowledge. The report states that such events can significantly impact the economy and markets, leading to instability, reduced liquidity, and trading disruptions. While this is standard risk disclosure, it serves as a reminder that the fund's performance is not immune to global events. So, what's the story here with the T. Rowe Price Target 2010 fund? On the surface, it's a typical target date fund, performing as expected by investing in a well-diversified mix of underlying T. Rowe Price funds, with a clear lean towards bonds as the target date approaches. The costs are reasonable, particularly for the I class, and the fund saw positive returns during this reporting period thanks to strong performance in its underlying equity and bond holdings. However, the real story is about the fund's internal structure and its reliance on the performance of other T. Rowe Price vehicles. The top two holdings, making up a huge chunk of the portfolio, are both bond funds. This makes the fund highly sensitive to interest rate movements and the overall health of the bond market. While the equity portion provides some balance, the heavy weighting in bonds suggests a cautious approach which is appropriate given its target date. But investors should be aware that the fund's growth potential is likely capped by this conservative allocation. The slight differences in net asset value per S-hair between the classes are directly attributable to their fee structures, where the advisor class bears higher costs due to distribution fees. In conclusion, Rowe Price's Target 2010 fund appears to be managed responsibly with clear expense structures and a strategy aligned with its long-term goals. But it's crucial to remember that you're not just investing in the Target 2010 fund itself, but in the performance of the specific underlying T. Rowe Price funds it holds. If those underlying funds perform well, the Target 2010 fund will likely do well, and vice versa. The main takeaway is that while the fund is generally on track for its target, understand its heavy reliance on bond fund performance and the associated interest rate risks. Alright, that is our breakdown of this T. Rowe Price filing. What is your take on these numbers and what they signal for the company's future? Do you think this heavy allocation to bond funds is the right move heading into retirement? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description for more community discussions. Thanks for watching. See you next time.